All right, the world of crypto is absolutely buzzing over a brand new breakdown that just dropped from banking expert and crypto commentator CharuSan XRP. Now, I know what you are thinking. $300 XRP. Come on, that's pure hopium. Market cap won't allow it. But hold on to your seats, because this is not your typical retail hype. This is a cold, hard look at institutional plumbing, liquidity bottlenecks, and the structural reality of cross-border money movement. So in this video, we are diving deep into the latest installment of the famous How XRP Will Reach $300 series. So we are going to expose why everyday traders completely misunderstand how Ripple's on-demand liquidity, or ODL, actually functions as an enterprise level. We are also going to talk about the massive hidden infrastructure partnerships that already connect Ripple to thousands of banks globally without the public even realizing. All right, so let's start with our very first question, which is why are retail traders completely underestimating Ripple's existing network? All right, everyday traders look at daily partnerships and think Ripple is trying to sign up banks one by one. They think Brad Garlinghouse is knocking on individual bank doors like a salesman. But CharuSan XRP points out that Ripple's actual strategy is infinitely smarter. Right? They went straight for the plumbing of the global financial system. Ripple has quietly secured integrations with absolute infrastructure monsters like Volant, ACI Worldwide, and Finastra. In my own personal opinion, if you don't know who Finastra or ACI Worldwide are, let me simplify it. These firms build the software and core infrastructure that thousands of banks use every single day just to stay awake. By integrating Ripple's payment rails directly into these pre-existing networks, Ripple does not need to pitch thousands of individual banks anymore. The infrastructure is already sitting inside the banks, waiting to be flipped. They are waiting to be flipped on like a software update. So to me, this means mass adoption can happen literally overnight, scaling faster than any retail trader expects. So, what is the ocean in a pipe liquidity bottleneck? Now this is where the math gets absolutely wild, and it's the core of why CharuSan XRP says price targets like $5 or $10 are completely missing the big picture. When a giant institutions want to move money globally, they are not moving pocket change. They are moving trillions of dollars through cross-border payment corridors. To do that seamlessly using XRP as a bridge currency, you need deep ocean-like liquidity. If the price of XRP stays low, moving that much money creates massive settlement bottlenecks and price slippage. In my own personal opinion, the expert used a brilliant analogy right here. He compared pushing trillions of dollars through a low-priced XRP market to trying to force the entire volume of the ocean through a narrow garden hose. It just does not fit. If the value of each XRP token is too low, the system clogs up because there literally aren't enough tokens in existence to handle the sheer volume of global liquidity moving simultaneously. Therefore, to safely and smoothly handle institutional volume, the asset valuation must be exceptionally high. All right? So the next question is, how does the $200 billion liquidity math prove the $300 thesis? Let's look at the exact mathematical example of CharuSan XRP brought forward in this series, because it completely shatters the argument that high token price is bad. Alright? Imagine a single major banking network attempting to process a $200 billion transfer. Right? If XRP is priced at a modest $20, right? Let's just highlight that part. $20, the system would instantly require 10 billion XRP tokens just to clear that single transaction. So in my own personal opinion, think about that. 10 billion tokens locked up for one single transfer. Now imagine what happens when you have 10, 20, or 50 global institutions all trying to settle massive cross-border transfers at the exact same moment. The available liquidity in the market would instantly vanish into thin air. Even though XRP settles in mere seconds, those few seconds are enough to temporarily freeze huge chunks of the supply. This is why transaction speed alone cannot fix a liquidity shortage when demand surpasses market depth. Right? So, why does the tunnel and traffic analogy change everything? To make this crystal clear for everyone who isn't a Wall Street banker, CharuSan XRP compared simultaneous global transfers to a high-speed highway. Imagine hundreds of high-speed sports cars, all traveling at 200 miles per hour, but they are all rushing toward a tunnel with a single narrow lane. It does not matter how fast the cars can run. The moment the volume of cars exceeds the capacity of the lane, you get a massive, grinding traffic jam. So in my own personal opinion, that narrow lane is a low XRP price. If the token value is low, the lane is tiny, and massive transfers get stuck waiting for liquidity to clear. The only way to widen the tunnel and give the financial system more lanes is to increase the value of each individual token. A $300 XRP is not just a fun target for holders to get rich. It is a structural, mathematical necessity for the global financial machine to run without crashing. Alright? So, what is the realistic outlook for this speculative target? Look, we have to keep our feet on the ground. $300 projection is undeniably speculative, and it relies on absolute maximum adoption of Ripple's ODL system on a planetary scale. My opinion is, do I think XRP hits $300 tomorrow morning? Of course not. But looking at the structural plumbing through the eyes of a banking expert completely changes how I view my long-term bets. It proves that the market cap arguments retail investors scream about are flawed because they calculate cap based on retail trading volume, not global institutional settlement velocity. If the Finastra and ACI networks truly begin routing traffic through the XRP ledger, the liquidity pressure alone will act as a violent upward catalyst. Overall, the debate around XRP's ultimate role in global finance is heating up. And this infrastructure series proves we are playing a game that is much bigger than crypto. So stop looking at the retail charts and start looking at the global banking corridors. If the ocean is getting ready to flow, you definitely want to make sure your pipeline is ready. And this finally ends our video. Thank you very much for watching and see you on the next one.